Have Ashish Kyal of Wave Strategy Advisors.
Right, Mangalam. See, the overall trend for the stock has been cyclically on the downside now because it has moved from around 580 levels or around 600, and in a very short span of time, we can clearly see it's touching around 420. So there is not much of a hope. I will say for sure not to average it here because the down move is impulsive. So it looks like there is a major down move going on. So if there is any kind of a pullback that he can get towards the level of 460, so use that as an opportunity to exit from the stock. Stop loss can be maintained around 400 levels. So I'm not too optimistic here, but I will use rather a pullback from here on and get out of the stock right now.
All right.
Absolutely, Mangalam. See, HDFC Bank has not given the promised returns that it has delivered in the past. But nevertheless, from the long-term perspective, I think if you can hold on for 2 to 3 years, the stock is excellent. I mean, we have seen it outperforming on many of the occasions. So this can be a consolidation. So over short term, I would suggest that if possible, he can average it out to some extent. Maintain a stop loss of 1340. This is from short term perspective. And maybe eventually we expect it to go towards the level of 1600 on the upside. I'm going to be bullish. I would rather extend my time horizon to 2 years and 3 years and hold the stock rather than just playing for a short term, because short term it is moving very much in sync with what Bank Nifty is doing. We can see the pressure in the Bank Nifty. An entire index has been consolidating, and that is what HDFC Bank is also doing. So do not expect miracles over short term. Just hold on with the stop loss of 1340 if you are a trader from 3-6 months horizon for the target of 1600.
All right, we take that point. Target of 1600 is what you said, is it?
That is correct.
His buy price is 1550, your stop loss is 1340, and his target is 1600. So would that be, the risk reward is unfavorable, right?
So currently, if you look at it, if he averages out at the current level, 1430 is where the stock, 1420.30 is where the stock is quoting right now, and 1340 stop loss is where we are. So we can still get a good amount of movement on the upside from here on, maintaining that stop loss.
All right, take that point, Ashish. Thanks a lot for clarifying that as well.
Absolutely, Mangalam. See, the stock has been in an up move since last 1 year, and it has doing very well. So it has continued to form a higher high, higher low, which is the precursor for an up move to continue. And there is no sign of exhaustion even now. So it's better to continue to hold on to the stock. On the downside, the stop loss can be maintained around 65 levels. And I think the upside movement can be towards 90. And if that is crossed, then I will not be surprised to see it moving even above the 100 levels. So hold on to the stock here. Mangalam, see, the overall trend for Andhra Petro has been on the downside for quite some time. It has been many months since we have seen the stock showing any kind of an outperformance. And there is a possibility we can see a short-term pullback on the upside towards that 120 level, where I would suggest to possibly book out and then book out the loss and be out from the stock. The volumes are not picking up as such. But short-term, there is a low which is formed somewhere around 90 levels, 92 levels, from where we saw a bounce back. So just in case the stock is now floating around that 20 days average, it manages to bounce back from here on, then we can expect it to go towards that 120 mark. So hold on with a strict stop loss of 90. In case that is broken, then I would advise him to be out of the stock and rather invest in some other place.
All right, we take that point. Some news coming in. Ashish, chartically, what do you say?
See, from if you look at the charts, the stock has been just moving in a broad range of 15 on the upside, and somewhere around support is at 12. It has not done anything over here. So from the charting perspective, I think he should be out of the stock. Maybe if he's able to track it and continue to hold on for a year or two, then it's okay. Otherwise, I would prefer buying a Kotak Bank or an HDFC Bank over an Yes Bank, because that way your risk is less, and the chances of those stocks turning out to be a multi-bagger, I think, is much more than a Yes Bank.
All right, we take that point. Meanwhile,
see, the support line here is somewhere around the level of 4,000 or just below that, because you can see twice it has managed to go towards that 4,000, did not close below it and bounce back from there. So there is some kind of a double bottom that we are seeing here, along with positive divergence, which indicates that downside momentum has actually reduced over here, and we can possibly expect it to bounce back and maybe move towards the level of 5,200. So technically 4,000 is the level that one has to maintain as a stop loss, and if that remains protected, maybe over short term we can see some kind of a movement on the upside.
All right, we take that point. Thanks a lot.